There it goes. All right, here we go.
All right.
Welcome back once again here to Market Talk. I'm Susan Littlefield, of course, filling in for Jesse. He is on the road today, but have no worries. He will be back with you guys as the week goes on. He's actually traveling back to the state of Iowa to spend some time with family. So we wish him safe travels today. John Heinberg joining us. He is with Total Farm Marketing. And you and I were kind of chatting before we went on the air, and just a lot of disappointment, shall we say, in these markets overall today. And John, let's kind of break it down and start out with this corn market. As you look at what's been happening and the way this July contract's been trading, what is your takeaway for this Monday and the first day of June trade?
Yeah, hopefully we walked into June and maybe we saw a little bit of a turn, that seasonal window where we find some flooring, and kind of felt like that for about the first hour this morning. And then, boy, that disappeared in a hurry as just all of a sudden the negative tone and the sellers just took back over this market, finishing 12, 13 cents off the high in that July contract was really a disappointing day today. And that even came with some pretty good demand news. Again, we keep watching those export inspections. They're above expectations today. Again, outside of the analyst range. Just saying we are moving a lot of this corn out, but it just doesn't seem to want to affect that old crop corn price right now as the sellers are staying in control. I think just the combination of big acres coming, good weather forecast here for the next couple of weeks to get this crop off to a good start. Then add into that a growing Brazilian corn crop has just made the market very comfortable with the supplies of corn at hand on the world level. So disappointing today for both July and December corn. Now checking those lows from just a couple of weeks ago or a week and a half ago. We'll have to see if those hold. If they do, then we got a nice little double bottom that maybe could get some technical turn in this market. But if not, it feels like we got a little more room to fall just on the momentum.
What about for ethanol demand at this point? I mean, we're now into summer. Hopefully we'd see a pickup there.
Yeah, hopefully we see that pickup in the driving side and the overall demand. But you don't look at the last round of ethanol numbers. The stockpiles are still fairly heavy here. So, and actually last week, even though we were still a little bit higher in production week over week, kind of slipped to even with or a little behind the USDA pace in terms of corn usage for ethanol. So we'll have to kind of watch that window here as well right now. But, I'm starting to hear a little bit of chatter that maybe some of these ethanol plants are a little short covered in terms of their supplies going into the end of June, early July window. That could really help out this old crop market. Plus, on the top of that, producers aren't selling at these levels here. So something's going to have to give there. Either the basis level is going to need to continue to push higher, or we're going to need to see some more movement out of corn. But the only way we're going to get that from the producers is right now is to get that price up on the cash market. And I don't see that happening. Talked to one producer today. He doesn't have much left, and that seems to be the tone I hear from a lot of people. But what he's got left, he's not going to sell at these prices. He might roll it over, make a new crop, and market it next year.
I was going to ask you about that. How much is still sitting in the bins, or have we seen pretty much decent movement at this point?
That's a big question too, in terms of where we are in the supply side of it. Earlier in the year when July corn was over the $5 mark, it wasn't there long, but it was over it. And there was some decent cash markets are available for guys. I know a lot of guys pushed it, got some sales in, took care of business there. They were worried about interest rates at that time. So, let's get this corn covered and get it off our hands and off our books. So that's a big question, from talking to a lot of people. They have minimal supplies or zero available here. So, I think that this July contract can get some push as we especially get into the first notice day window. Again, there's that seasonal window. We could see some movement, but it just doesn't feel like right now that there's any energy to be a buyer here, as the market feels like with this, good planting pace early, this crop might get here a little bit sooner than the market's anticipating. Therefore, we can just kind of hold out and wait for those fresh corn supplies.
What are we seeing from the fact that global supplies, you talk about fresh supplies, but maybe not from the United States? We know Brazil's got a good crop coming in.
Yeah, that's been a bit of another wet blanket over the last couple of weeks here. And, we've just been hearing the talk that they've had good weather overall down there. And now we're starting to get some estimates coming in, raising that Brazilian corn crop, the total crop up to I've seen as high as 140 million metric tons. That's 10 million metric tons above where the USDA is. So you do the math on that, it's a quick 380 million bushels more corn that could be out there if that's the actual number. So right now, the interesting side, competitive on price. There was some internal needs within Brazil. They needed those bushels. So that's kind of getting absorbed here right now, keeping prices a little bit firmer. But there's going to be a window where they're going to shift and be in control of the marketplace. Plus, obviously, you do have Argentina corn out there as well in the marketplace. So there's just more competition. US, we saw a little bit of that last week in the export sales with some, but then we followed that up with some individual sales at next couple of reports. So I still think the demand tone is going to be a very key piece of this puzzle right now. I think the USDA needs to bring that old crop carryover down some more, maybe get that under that 1.4 billion bushel level, so that we'll have to see how that plays out in the longer term. But at least right now, like I said, the world's fairly comfortable knowing that they got multiple locations to get corn, especially on the export market.
But hasn't, John, there been some concern about the weather in Brazil in certain regions that some of this crop might have been damaged?
I know there's also watching some of the wetness side of things, but in where things are in terms of harvest pace, some of that's in terms of an early harvest. I see they're a little bit behind, where they're all, again, the production area is so large. Again, when you plop it on a U.S. map, how much acres are out there, there's going to be areas that have poor production just because of the weather, but there's areas that are knocking it out of the park in terms of record yields. And those are some of the stories I'm hearing. In the long run, when you start balancing it out, usually if you got good production in those key areas or those big, growing states like Mato Grosso, they outweigh a lot of the weakness that you hear in some of those other regions.
Well, John Heinberg's joining us with Total Farm Marketing. Let's switch gears and go to the soybean side of the trade action. Well, since we're talking about South America, what's your takeaway for them right now?
Obviously we just got a lot of bushels out there and they're in control of the export market at this time frame. We saw sales really dip last week and they're in their seasonal window where sales aren't, anything now is icing on the cake in terms of a bean sale or an export sale. But U.S. beans and Brazilian beans are actually still fairly competitive in terms of export prices. So it wouldn't shock me that we still pick up a little business here and there just because of the availability and the ability to get beans out the door here that they may not have in South America. But again, that crop is still going to be a big factor and it's going to weigh and have a long tail in my mind. You go look at the fact that they're putting out an extra 15 million metric tons of soybeans into the global marketplace. Global bean demand is actually softer, than it needs, for that size of a total. So that's just something that concerns me in this market here going forward. Charts in the bean market right now don't look very good, and obviously the biodiesel, the oil side has been a major weight on bean prices recently. As much as we enjoyed the rallies that were led by soybean oil, right now this weakness, as we continue to just kind of build some negative news against biofuels and the use of soybean oil, is really starting to weigh on some of these bean prices as charts look really weak here with today's close.
And you and I were talking before we started today's market talk, is there's just absolutely no government help. And it's just that sitting and waiting game when it comes to these biofuels.
Very much so. I mean, we're waiting for the blending requirements to come out. The market was anticipating a nice number there, well over 5 billion gallons. Now it sounds like it's going to be less than that. And that seems to be dragging their feet as well. We thought those numbers would be out here by the end of May. Now, again, going through the process with with what the EPA was talking about, it might take a few months. That's been weighing on the market. Then you got those SREs, the small refinery exemptions that the Trump administration keeps talking about. And, obviously, if they're giving exemptions, that's knocking that demand for soybean oil out as well and using that blending credit up. So again, those things are just weighing on a market that was pretty heavily bought going into this window with the anticipation of getting some positive tones, and now it's not getting them. So, soybean oil is now really the major market driver in terms of byproduct or product off the soybean side of the equation. All the way up until the last handful of years, it was always soybean meal. But unfortunately, soybean meal is starting to turn into the byproduct, very much like a DDGs do in the ethanol side. As you got Argentina crushing, you got Brazil crushing, you got U.S. crushing, all producing heavy amounts of soybean meal that needs to be on the market. Saw a little move in that last week. We got back over $300 a ton, but it just seems like that seems expensive right now. And this market's focused on what's happening in that soybean oil trade in terms of driving bean prices.
We're going to go below and continue to test below this $10 mark for soybeans?
I think it's going to be definitely a chance that we come down to that area, at least, see how it feels. I know obviously we're going to be watching what's going on with trade and the communications with China. Obviously that was something I think is also weighing in the backside of the market. you know, they haven't picked up a bushel yet for new crop beans. They were that way last year at this time frame, came in about mid-July, finally started buying some beans. And realistically, when we get the harvest and U.S. bean prices are down because of harvest, they'll step in and buy some. But with those excess beans out there from Brazil, that maybe that need is going to get filled a little bit more with those Brazilian beans. So we'll have to see how that comes into play. So those are factors, as well as, we'll see the crop ratings and things here in a little bit here on Monday afternoon. We'll see how that comes into play. But if we look like we got a decent crop, and even with the reduced acres, that large global supply will make it very hard for this market to rally unless we truly have something kind of falling apart here on the weather side, which right now doesn't look like it's happening at this window.
I want to come back to weather in just a second, but since you brought up the weekly crop progress, do you see any surprises because we got some decent movement for some, but not others? We look at
we're getting down to that last 10%, seeing if it gets in the ground here. And now we're in the 1st of June. That's going to be something we got to keep an eye on. Where is those issues occurring? Again, the Eastern Corn Belt, the Ohio River Valley, Southern Illinois, Indiana, up into Ohio, continue to still have some issues. Maybe there's enough window for more crops to get in this year on this last week. So we'll have to see how that plays out. That it could be a point where the market gets a little concerned, especially maybe on the soybean side, because we got a pretty low acre number out there now. If there's also 2, 3, 4 million that isn't going to get in because of weather, it sounds like this next batch of rain coming through is going to kind of target that area again for some heavy rainfall. Then we might start seeing that come into play in terms of the marketplace. If those beans were to happen to go into prevent plant or even get pushed further back, which, kind of takes that 52.5 bushel yield target out the window for what the USDA has. So there's some things I think in this market we got to keep an eye on here. But that planting progress, again, now we're in that final last little percentage points, will still be fairly key if it happens to be a little bit bigger than the market anticipates on that report today.
So then, John, how much of a weather-related market are we? Is it heavier, or is it just kind of really starting to pick up some momentum, even though it's the 1st of June and we got a lot of growing season ahead of us?
I would say there is minimal weather premium in the market, or minimal care right now in terms of the weather, just given those forecasts. I mean, I'm looking at forecasts out now to mid-June, keeping that moisture in, and some of those areas that really needed it. So again, like I said, there's not a lot of fear in the market at this time frame. Now we know how summer weather is. Next thing you know, we get a forecast that shifts hot and dry, and this market gets a little anxious, especially given the positioning of where funds are. We could see some pretty quick movement. But I hate to say it, it just gets this. I'm getting this feeling this year, any good rallies, if we get one, when am I talking a good rally, getting December corn back to the 470 area, 480 area, probably is a good rally. That's 50 cents. That's probably going to be a window that we want to make sure we got something working for sales, or getting some puts in place, pulling some triggers, and then figure out what to do to keep the balance in the longer haul.
What are your thoughts on the way this wheat complex has been trading?
Realistically, good day, but disappointing day. At least they held on to positive gains. But boy, it sure have been nice to hold on to those double-digit gains to start the session today. Obviously we had some things going in terms of the news on the overnight, that bit of a jump in terms of the tensions in the Ukraine war, maybe brought a little war premium in early. We've always kind of seen that as the markets got comfortable with it fade out. And I think that's maybe what happened today. There was really nothing after last night's news to push that market. Then now we're watching the weather. Maybe it's getting a little too wet. Does that start affecting some quality issues in some areas? You got the market. They were sitting record short spring wheat. They're still holding a large short position in the Chicago wheat. So we got a little bit of a short squeeze going here. So we'll have to see how this kind of plays out. Again, the biggest problem with wheat, we need to sell it. We had a fairly decent break in the U.S. dollar today, and that didn't seem to really motivate the markets a whole lot either in that regard. But wheat demand's been actually pretty good on the export front here, starting the new crop here in terms of some of these weekly sales numbers. But it seems like somebody's always got some wheat in production out there. So there's always still areas to watch. What's going on in the Ukraine? See, Australian wheat's going to be down from last year due to some drier weather conditions. Watching what's going on in Europe in terms of the European Union, their wheat production. So wheat's one of those markets that can quickly turn into a powder keg and get going. I was kind of hoping that was going to hold the day and kind of help pull that corn market and get those shorts a little nervous there as well. But like I said, just felt like the sellers are still in control, and they just kind of kept a lid on today's gains.
Well, you brought it up a little bit, that those tensions that are happening in the Black Sea regions, those talks in Turkey that just kind of fell apart. What are we seeing, and how much pressure is it going to put on these markets going forward?
Again, the whole Black Sea region is just a different area right now because of just where it's been, how long it's been. That's why the news really kind of falls on deaf ears, even though, earlier in this, a couple of years ago when this all kind of blew up, you'd have one incident, bam, wheat's up 15 cents on the overnight, that type of thing. And then it would fade it out away. And it kind of just felt like that again today. Like the market's just tired of it in general until we really see something happen that can change the projections in the longer term in terms of demand or supply, or even affecting the wheat price. Russia's been kind of undercutting the global wheat market to help pay for the war machine. So realistically, maybe the war coming to a pause or an end would be good for wheat prices because it will allow the free market to kind of kick in a little bit more. But that's going to be something we got to keep watching in the headlines going forward until we see some type of development. But again, the market's just kind of fallen on deaf ears there. Very similar to what we are seeing even too in terms of the trade front. Unless something big happens, I think the word tariff has just gotten overused and the market's tired of it. Even with some of the news we saw last week in terms of China's talk today, maybe a wait on beans for a few pennies a day. But I remember in times where that would really knock the market back and forth. And I think the market's just kind of already working past that news cycle and waiting for something new.
Well, let's talk about something that isn't new, but still keeps getting the market's attention. That's on the livestock side, John. The way this cattle market and this cash continues to trade, can the momentum keep going like it is, knowing where consumer demand has been hanging out?
It's been very interesting here that we've seen some really good move in that consumer side in terms of the retail carcass value. Choice carcasses a little bit softer today, but pretty minimal. That's still trading at 366. We've seen that jump in selects too to getting back into the 350 window. So it seems like the consumer demand is still there. We're through the Memorial Day holiday, which is a concerning point to me. And I can actually look at the charts a little bit. Cattle market looks a little bit tired. I thought Friday's trade was pretty disappointing. It's really strong cash trade that sounded like it went out well into June, showing the reflection of the tight cattle supplies. But we just couldn't hold on to gains, finished the day a little bit negative. Today we just traded within Friday's range. So really today was an up day, but it wasn't a mover in terms of technicals on the charts. We didn't take out previous highs. We just consolidated. We got that big reversal from a couple weeks back off the highs. Again, now we got another little fail point here on Friday. It makes me wonder, we had that story break, that false story in terms of the New World Screwworm in Missouri report that just kind of tanked this market until it got, basically countered and reported as false. But I'm kind of wondering if it didn't make some of the hedge funds and the managed money got a little nervous. Like, do I want this much out there knowing that we've got this much volatility? Add in the fact today that the CME raised those daily trading limits, so that even increases the exposure of risk even more. That maybe is some of the reason we saw things fade on Friday, is just the fact that hedge fund managers balance out their risk in the portfolio and they say, well, maybe we need to step aside a little bit of cattle here. So we'll have to see. I mean, obviously the fundamentals are pointing higher. Typically the June contract likes to rally into, first notice day and expiration. So we'll see if that holds true. But, obviously we're still at pretty lofty levels in a market that is kind of due for a bit of a correction, like we've seen off these last couple of rallies of about $10 to $15.
And finally, do you see the demand for pork picking up anytime soon?
The pork demand actually in carcass value is very minimal change there. We saw that strength at least kind of hold those summer months in. The June contract right now trading at a pretty good premium to the index. Got expiration here on the 13th, so we're getting kind of tight in the time window. That index is going to be a bit of a limiting factor. Even though we've seen some decent movement, in terms of that cash index trending higher, it's just not catching up to where the June board is. So that worries me a little bit on the front end. But I like the way the charts have been acting. We've got some good strength all the way out in the back end again. Right now, if we do start seeing some slip in beef demand, I could shift into the cheaper pork products. And those numbers are still slightly tight as well out there. So the protein sector still looks very good to me right now, but it wouldn't surprise me we see some pullback in both of these. If we get to a point we need to just get out over our skis a little bit. But to me, those are going to be opportunities to get length in and hold into the longer haul as that consumer demand still holds together, that's going to keep supporting these markets.
Well, John, thanks for joining us today. John Heinberg, he is with Total Farm Marketing. I'm Susan Littlefield, sitting in for Jesse Allen. He'll be back with you tomorrow for another edition of Market Talk. Thank you very much.
No problem.
I appreciate it.
Yeah. If anything, holler. So
okay. Sounds great. Enjoy the rest of your day.